Hey guys, welcome back to the channel. In today's video, I want to talk about how I day trade the E-mini S&P 500, okay, which is the ES futures, all right? So I know a lot of you guys have questions, especially newcomers here to the channel, about my trading strategy, and I simply trade using or surrounding or around supply and demand zones, okay? So I'm going to go through some examples in today's video, kind of breaking down my strategy and how I use it in my trading each and every day, and show you some techniques that I use. But it's a pretty simple strategy, and it all has to do with simply finding the right key areas or levels on your charts. Okay, so simply it's just locating supply or locating demand, okay, off of a higher time frame chart, all right, and then scaling down to a lower time frame chart, okay, basically zooming in on that lower time frame chart and see if you have an area of supply and demand as well. So basically looking for a structure break on the lower time frame and then price pulling back and then seeing if you get rejection. So it's simple. It's a simple strategy. Let's run through that again. I look for an area of supply or demand on a higher time frame chart. Okay, that's rule number one. Rule number two is once I've located that area of supply or demand on a higher time frame chart, I move down to my lower time frame chart. So my 60 range chart is pretty much the highest time frame chart that I kind of incorporate into my daily trading. So if I'm into or tap into an area of demand on the 60 range chart, then I scale down to my 12 range chart, which will be my anchor or my entry chart. And then I start to look for what I call making structure and breaking structure. That means at some point, I want to see price, now that we've tapped into an area of demand on the 12 range, well, on the 60 range, the higher time frame, and then on the 12 range, if we are definitely have confluence and we also have an area of demand or prices tap into an area of demand on the 12 range as well, then it's a no-brainer for me. But if we're not tapping into an area of demand on the 12 range, what I like to do is scale down to my 12 range chart. Then I like to look for a structure break. I like to see price making structure to the upside. That simply means making higher highs and higher lows, okay? Then I must see a structure break, meaning looking to the left side of the chart to see if it's going to break or has broken through a level, all right? Taking out a swing high. Once it does that, then I can mark a small area of demand because we have now a structure break on the 12 range chart. Once price pulls back to that zone on the 12 range chart and I get full on rejection, then I am entering the trade for a long position, okay? So let's take a look at that here today and talk about some examples here on the charts. And I'm going to go ahead and mock up a few areas here on my charts here, looking at the E-mini S&P 500, like I said, okay? All right, so let's look at yesterday's session, okay? And what we see here is yesterday, okay? What did price do here yesterday? All right, when it pulled back here yesterday, right towards the close, all right, I'm going to show you an area of demand, and I talked about this yesterday, right around 340 yesterday, right before the market closed. All right, price pulls down and taps into this area of demand right here on the 60 range chart, my higher time frame. I want to start always from a higher time frame and scale down to a lower time frame. But first, price must be either in an area of supply or demand on my higher time frame. When price pulled down or retraced back here and moved lower, it tapped right into this this area of demand right here. Okay. Now you may ask yourself, why is that an area of demand? Well, look at market structure, and this is what I'm trying to tell a lot of you guys. You have to understand market structure. Right now, if you are learning or wanting to learn how to actually trade for a living, okay, to be profitable, to be consistent, okay, and you're kind of looking at how I actually day trade each and every day, the E-mini S&P 500, okay, or the ES futures, you have to understand market structure, okay, because without understanding market structure, you might as well just give up flat out right now today. If you do not understand market structure, you have to go back to the drawing board and start from scratch, okay? Because there's no way you're going to be able to read the market if you do not know what the market has done and is trying to do. Price is always laying foundation. It's making foundation. It is developing roots. It's developing, movement as it's moving. what is it doing? It's building structure, and that's called market structure. Okay, all right. You have to be able to read it. You have to be able to understand it. You have to be able to read price action. Once price has made structure, you have to be able to interpret what price is trying to do next. Okay, so let's talk about why this is demand. Okay, and let's talk about that. All right, so price is making lower lows to the downside here. Okay, everybody knows what that is. What is it doing? Making lower lows and lower highs as it's moving to the downside. All right. It finally comes down and makes a low right here. All right. So why is this an area of demand right here, which we're getting ready to use as an example in our strategy? All right. Let's talk about that. It made a low here. The moment price is at a low point on the chart, or has made a low, or has made a high, okay, as it's either pushing up or pushing down. In this case, price is moving to the downside. It's made a low right here. The next thing it does, it turns around. It must have hit some area of support way out here to the left-hand side of the chart for it to reject and start making movement back up to the upside. So that could be a major area of support or another key identified area of demand, okay? So either way, it's rejected this area here, and this was on September the 4th, all right? So price has made a low right here, okay? Now, what does it do then? It pushes up, makes a high. Okay, has not broken structure yet, all right? Pulls back, makes a lower high. Now it's starting to run to the upside here. And what does it do eventually? It starts taking out structure here to the left-hand side. Okay, you see this big swing to the downside here? What does it do? Pushes up, makes a high. Pulls back, makes a lower high. Starts pulling to the upside, pushing to the upside, making higher highs and higher lows, breaking structure, taking out this high here, and eventually takes out this swing high right here, okay? Now, what I'm looking for price to do is it has to take out structure for it to form an area of demand. So when it made this high here and pull back, this is on the higher time frame, the 60 range chart, and we're identifying key areas of demand on the 60 range chart. Pushes up here, pulls back, has not taken out any structure yet. Pushes up here, it takes out this supporting swing right here within this bigger swing of structure, okay? So it's taking out a supporting swing right here. But what I wanted to see it do is take out a major area of structure, okay? And that being this high right here from this big swing to the downside. So it continues pushing up, makes a higher high, higher low, higher high, higher low, and then eventually it pushes up higher, taking out structure right here. Now, once it does that and finally takes out structure right here, okay? Right here. Everything below it, okay, you can start looking for these swings right here that where price started making these higher highs and higher lows. These, it's leaving behind areas of demand is what I'm trying to say, okay? The swing to the upside here, pushes back, or pulls back, pushes higher. These, as it breaks this top right here, this swing high right here, there are areas within each swing that can be considered an area of demand. Now, what I like to see at this point, once price has broke structure here and has left behind areas of demand within these swings, meaning the higher highs and higher lows, which are swings to the upside, I want to trade off of areas, not directly, but once price comes back to it, and then I look for the rejection each step that we take. I want to look for an area where price has a demand zone, where it's untested pretty much, where price has not tested it. Okay. So as price pushes higher, breaks structure here, it continues pushing back up to the upside. Now, the thing about it is price, once it breaks structure here, does not come immediately back and test any of these areas. It doesn't test, this swing to the upside here, there's demand sitting right here. The swing to the upside here, there's demand sitting here. Swing to the upside here, there's demand resting here and right here because this is a supporting swing. Okay? Now, price continues pushing higher. All these areas here where there's demand resting at are untested demand zones. Okay? And something could happen definitely once price gets back to them. All right? And sometimes what you'll see is price will push up, break structure, and then come back immediately back down and test an area demand directly below. It doesn't do that in this case. It keeps pushing higher, making higher highs and higher lows. But eventually the tide turns. It tops out somewhere up here because it hits some area of resistance up here at the top. and then it turns and starts making lower lows and lower highs. And yes, as it is moving back to the downside, it is taking out structure. Always look to the left-hand side of your chart and you see that it's starting to take out structure. But we have key areas of untested demand zones below us, okay? So as price is pulling back now, okay, it's broke structure here on the way to the upside. So if you can't visualize the structure there, let me bring this down here a little lower. For some reason it's really acting funny now, so maybe way down here. Okay, so this was a swing to the downside, pushes up, and then swing. Price broke this high right here, okay? It broke that area, broke that high. So it's pushing to the upside. I said that you want to see price take out structure. It's finally done that, and it's left all these little areas or swings to the upside, okay? And back within those swings are key areas of demand. Swing to the upside, high, higher, low, higher, high, demand. High, higher, low, higher, high, demand. High, higher, low, higher, high, demand. Breaking structure right here when that candle closes above. Now, as I just said, if once price comes back to any of these zones on its way back down, it could be here, it could be here, if it comes to that area, but it broke right through it, it could be here, or it could be here, right here in this demand zone right here, okay? Now, what do we see price do when it came down? As we move it to the downside, all right, what does it do? It's making lower lows and lower highs, okay? Is this an area of demand where it can balance it? Where it can balance it? Let's take a look. Okay, sure it is, but it comes there, it does reject, but you have resistance right above, okay? All right, and this is a higher time frame chart, but if you scale down to a lower time frame chart, then you will see it. There must be some swing levels coming down to the downside on a lower time frame chart at which price is rejecting from. It comes to this area, rejects, pushes up a little bit. There must have been a little swing area right here on a lower time frame chart, and price bounced from it and continue pushing lower. All right, so you got to be mindful as well as price is breaking structure to the downside. Are there swing areas even on a lower time frame chart that where price may reject at? You know, it rejected this little area here, and this is not a major area of demand. And the reason why it's not is because if you look at this little swing here, what do you see? You don't see a lot of aggressive buying coming out of it. Aggressive buying is demand, is an area of demand. That's what that means. A lot of green candles, a lot of thrusting to the upside. All right, so that's not going to be a high probability area for me. Okay, as far as the demand zone, I'm looking for areas where there a lot of buying came out of. So if I start looking down here on this leg to the upside here, after price broke this structure right here, what do you see? I see this area here, a lot of aggressive buying came out, a lot of green candles to the upside in this swing level. I see the pullback here, a lot of aggressive buying came out of this area here. So I'm looking for key areas which could be classified as high probability areas where there are lots of buying that came out of those zones. Now, price continues pushing lower. It comes into, it did not tap into this area quite yet. It did hit this little area right here. Okay, could this be classified as an area of demand? Yes, because it's a supporting swing out of this larger swing to the upside where demand rests at. All right, so when price comes to this area here, okay, all right, it kind of rejects here, you can see, but we're not trading off the 12 range chart. All right, what we want to do is go to our 12 range, excuse me, this is our 60 range chart. We want to go to our 12 range chart to see if we're getting a structure break, okay? But let's just go ahead and play this out and show you, all right? We're going to take price on down because to me, this is a very significant area where lots of buying came out of. This swing area right here. So if you're trying to classify what is a high probability area of demand and what is not a high probability area of demand, just look at the swing itself, okay? Look at the swing. How much buying came out of a zone, out of a swing? Here, a lot of decent buying. Here, decent buying. Okay, so once price comes back to those key areas of demand, which it did, all right, right here, or it could be right here. It paused right here. Go over to your 12 range chart. See if you get the rejection, meaning a structure break back to the upside. And then once you get the structure break, just how we did right here, taking out a key area of resistance, look for the pullback and mark you a demand zone off your 12 range chart. So we'll let this play out because I'm going to show you the step 2 part of this. All right. So step 1 is we want to identify a key area of demand on our 60 range chart. For me, it could be an hour chart for you, 60-minute chart, or 30-minute chart, or whatever chart you use for your higher time frame. Okay. For me, I use range charts. This is the 60 range chart. This is my higher time frame where I use to mark key areas of demand or supply. All right. So here I'm going to go ahead and mark my my supply zone. Excuse me, my demand zone. All right. This swing here, lots of buying to the upside. There is demand in this area. So we see right here at 340 yesterday, price comes and it taps right into this key area of demand right here. Okay. The way to draw your demand zones, for instance, is once price starts making higher highs and higher lows. All right. Let's show you. Okay. We have this green candle here to the upside. It pulls back with a red candle. We have a tailed candle or green candle that makes a wick to the downside. If you get a pullback like that, or a low right here like that, where price has pulled back with a red candle, and then it tails with a green candle, which wicks out at the bottom, draw your demand zone at the lowest point of that wick back up to the top area of that red candle. That's your zone. Price comes back to that area right here. All right. You see it on the way back down. Taps into this demand zone. What do we do then? Now we have identified our demand zone on the 60 range chart. Go to your lower time frame chart and start looking for structure break and then a pullback for rejection. Okay. So you have to mark the steps down if you aren't able to follow. Step 1, identify an area of aggressive either buying or selling. Aggressive buying, demand. Aggressive selling, supply. In this case here, we're looking at demand. Okay. Mark your aggressive area of demand where lots of buying came out of on your 60 range chart. For me, it could be your higher time frame. It could be another. You could be using minute based charts or tick based charts, whatever it is. Okay. But whatever your higher time frame is that you're using to kind of form a direction or bias in the market, mark a demand or supply zone. Step 1. Okay. Step 2. Once price has tapped into that area, come back to it. Come back to that area. Go to your next lower time frame chart. For me, I'm using the 12 range chart. Okay, which is my anchor chart, which is I also use my entry chart lots of times. Okay. So now that we tap back into this demand zone right here, I'm going to my 12 range chart. All right. I'll minimize this chart here. Go into my 12 range. Bring this back up here. Blow this up. Let's find that time period from yesterday. All right. Where was it at? Give me 1 second. Okay. Disregard this arrow here, guys, because I was using that for yesterday. Okay. So this is the zone right here. I'll tell you what. Better yet, let me do it. I'm gonna do it this way. I'm gonna go ahead and put this on all charts, so you can see it as I'm adding it. So it'll show across all charts. All right. For some reason it didn't do it here. Let's do it again. All charts. Okay. I'm not sure what's going on here. Oh, here it is. Okay, there it is, right here. All right. So here we are. Same time frame. I mean, not time frame, but with the same area. This is the area of demand on the 60 range chart right here. Okay. All right, we identified that. Step 2, go to your lower time frame chart. 12 range for me. Whatever your lower time frame is, go to it. I marked up the area. Boom, here it is, right here. Now, step 2 is look for a structure break. Okay, just as we did on your higher time frame chart. All right. Okay, so here I see price has a low right here. It pushes up, makes a high here, pulls back, makes a low here, a lower high. Breaks higher right here, taking out this high. Okay, let's see. Okay, so it's taking out resistance right here, breaking structure. Pulls back, makes it a lower high. A higher low, lower Gracious, I can't get it right today, guys. Makes a high here, higher low, higher high, higher low, and keeps doing that to the upside. Now, once price has broken structure right here, meaning breaking through an area of resistance, it has to break through an area of resistance. This is how I trade using the strategy, the trading strategy that I use here on the ES futures. Okay, and you can use the same strategy. Doesn't matter the market. It works. Trust me. All right, but it's up to you. If you have a strategy that works for you, then keep with it. Stay with it. So, structure break here on the 12 range now, the higher time frame. All right. Now all I have to do is I'm gonna go ahead and delete this zone here because now we got a structure break on the 12 range. All right. Tap into 60 range demand. Okay. Go to your lower time frame. Look for a structure break. Okay. That's step 2. Now step 3 is mark your demand zone on your 12 range chart. Okay. We'll do that. Okay, so price pushed up here, made a high, higher low, higher high, breaking structure right here. It's broke structure. Now I'm interested in drawing that demand zone. Okay, here's an area of demand right here. Okay, as price broke structure, pretty much every level below it, you can treat or consider as an area where there can be possible demand there. But you must look for, again, here, just like I said on the 60 range chart, swing areas where there's aggressive selling coming from, because those are going to be the highest probable areas of where you can actually kind of trade from. All right, so here it is. Okay, so here you got a swing to the upside, a pullback, which is a higher low, pushes higher, aggressive buying comes out of this area. Which to me, if I see aggressive buying coming out of an area after a structure break, what does that tell me? Then that's got to be a key area of demand. All right, so I mark the lowest point of that pullback right here. Now we got, like I said, a wicked out green candle here. It wicks out the bottom here, so I mark it from this bottom portion up to the top end of that red candle there, and I can draw it kind of forward here. All right, give me a second. Bring it up a little bit. Right there. Now, what do we see happen here? Okay, as price continues to push higher and higher, making higher highs and higher lows, it pulls back. Okay, and this is a key area right here. In this area, for one, it's an area where it was an area of demand off of the 60 range chart. 2, it broke structure here, so we know this is the origination area, the beginning break or area where price started moving to the upside to break structure right here. So 60 range demand. Okay, price comes back to this area pretty much. It's a structure break right here in the 12 range, and we can start marking our demand zones. Okay, so as price continues making higher highs and higher lows, it pulls back. Yes, it does, but it doesn't quite come to this area here. But be mindful, like I told you, look at every swing with price after the structure break, because it could be considered as an area of demand. Now, here's a swing to the upside just as well. Price pushes up here, pulls back, and you have some buying coming out of here. Decent amount of buying that comes out of here. All right, so you can also mark this area here. Okay, bottom end, top end, draw it out. Okay, price taps into that zone right here. Okay, so there's a demand zone here, there's a demand zone here, and there's demand sitting right here dead at the bottom. Okay, you can draw that too. So, but price comes and taps into this area of demand right here. All right, now once price hits that area of demand right there, I'm looking for rejection. In this case here, I want to see a close of a candle. I'm trading off the 12 range in this instance here, or you can switch over to your 4 range. But in this case here, I'm looking at my 12 range because I paired my 12 with my 60 range. Okay, I kind of pair charts together sometimes. Sometimes I'll use the 12 range chart as the higher time frame, market area demand, and then use the 4 range as my entry chart. In this case here, I'm using my 60 range as my higher time frame and the 12 range as my paired chart. Okay, so we tap into demand here on the 12 range chart now. All right, and then price, I want to see a candle break. If I'm trading on my 12 range chart, I want to see a candle break to the upside. Okay, now this candle here doesn't break this red candle. What does that mean, a candle break? I want to see a green candle form breaking through and taking out the body of a red candle pretty much. All right, so this candle here doesn't do it. This candle here does. At the close of this green candle right here, and go long. So, okay, I'm in the trade. All right, I went long. The question is, where do you put your stop loss at? Put your stop loss right at the bottom end, wherever you enter your trade at. So, for instance, let's say you didn't get to the trade right here, okay? Because you want to wait for that candle break, right? So the candle here, the green candle closes up to the upside. Where do you put your stop loss at once you're into a trade? You're getting in here right around at 46.5. Put your stop loss at the bottom end of that supporting, at the bottom end of the of this low right here, you know. But I wouldn't do it tick for tick. I'll give you a few ticks below that, just in case they decide to come back down, wick this bottom out right here without breaking below it, and then turn the market back to the upside. So give yourself a few ticks, breathing room right here is what I'm trying to say. But you get in at 46.5, and if you follow price action as it's moved to the downside here, you know, there's levels here as prices moving to the downside. It's taking out structure right here. These swing highs and swing lows. These higher highs and higher lows as it's moving to the downside. It's taking out structure, okay? And as it's doing that, you got to pay attention to price action, even coming down where it's making a low here, a lower high, makes a lower low here, okay, or right here, pulls back, makes lows here. You got to follow price action. So where would I take my first couple, my first contract or two out, whatever the case is, right back up into the high. Once I'm into this trade here, you can take it back up to this high or back up to this area of support and swing. So if I'm in with two contracts, typically I'll probably more likely, run price back up to, or my first contract, take it out at this high right here. And, if I do that, we're already back here to this area of resistance right here. So I'm probably taking out my trade right here. Or if I'm in with two contracts, I get out, scale out with one, and allow my last contract to kind of trail behind price. So as it's pushing up, pulling back, and pushes higher, then I start moving my stop loss accordingly below it, below price. And that's called running a trailing, a trailing contract behind price. All right. So let's run through that again. And what we'll do is, okay. So we'll run through it again, and I'll break that down for you guys again. But I'm looking at price action right now, say for instance right now, right? Okay. Remember that demand zone I marked right here? What did it do? It came to it. It rejected it. Okay. And it closed right here. All right. But you gotta be careful because right above you have, there's going to be resistance sitting right here. So you got to be careful with that. All right. So now let's come down here. There's demand at the bottom right here on the 12 range chart. And you could trade straight off the 12 range chart, say for instance, like this in this case here. Why? Because this is demand sitting down here at the bottom. Why is it demand? Price imprinted and made a low here. It turned around, started making higher highs and higher lows back up to the upside, taking out structure. And as it was doing all that buying, that's aggressive buying to the upside, taking out structure. It has to take out structure, okay? And when it does that and take out structure with all this aggressive buying, it's leaving areas of demand behind. Now, if price breaks, let's say, it breaks this candle here to the upside, be careful because we still have areas of resistance right below us, okay? All right, so you have to be careful in moves like this, even though we're back down here to the lows. Price, not lows, they're actually the lows of yesterday's trading session. So price could reject this area, break here, but we have resistance sitting right here back at the top. All right. So let's break this down one more time and kind of clarify things. Okay. All right. So what do we have here? All right. This is the 60 range chart, starting with the higher time frame again, quickly. All right. We have movement to the downside, price making lower lows and lower highs. All right. It makes a low right here. We have structure that price made to the downside right here. A low, lower high, lower low, forming a swing. First step is we want to see price take out structure, okay? Pushes up, high, higher low, higher high, higher low, higher high, higher low. Boom, it breaks structure right here. We have swings at that point. And every swing, if you see where there's aggressive buying at, you can start marking areas of demand, okay? Within all these little swings to the upside here. And what we're looking for at that point, once price breaks structure, like I said, we want to see price come back on a move back to the downside and test high probable areas, which we classified from, or areas where there's a lot of aggressive buying at. So think about people always have the question, well, how do you identify a high probability area to locate demand? Well, it's going to be centered. It's the whole idea of it is just look for areas where there's aggressive buying coming out of it. Lots of buying, lots of green candles, say for instance. A major swing here to the upside, a lot of buying. Swing here to the upside, a lot of buying. So it's going to, and tuck back at the bottom end of those swings are going to be key areas of demand. Key areas of demand. So you mark that demand zone, and you just simply wait for price to come back to key areas where there's aggressive buying in the market, which are demand zones, which are untested. As long as it's untested, it's an aggressive area where lots of buying came out of it. It's got to be classified as the area of demand. Okay? But the thing about it is, once price tapped into one of those areas, a demand area, then step 2 is scale down to your lower time frame chart, which right here, I just showed you. This was the demand zone right here. Okay? It tapped it yesterday, 340 yesterday. All right? Once it hit that area, now I'm on my 12 range chart. All I'm looking for at this point here is a structure break. Okay? Structure break back to the upside, just as we identified a structure break on the 60 range chart. Price pushes up, pulls back, breaks higher, break structure, meaning breaking through an area of resistance. And then it's the same thing. You mark an area of demand, meaning an area of aggressive buying coming out of a swing as price moving to the upside. And then you just wait for price to come back to a aggressive area or aggressive level, okay, or swing area where there's aggressive buying coming out of. Once price taps into the area, as it did right here, you look for the rejection to go long. In this case here, price comes to the zone here, rejects, closes the green candle above what they call a breaking candle. Okay, it breaks above this candle here, go long. All right, take your entry long, and that's what I did. And that's how you take that entry. All right. Okay, now let's mark an area of demand, because sometimes you can trade. A lot of times I do this right off my 12 range chart. Okay, and even straight off my 4 range chart. Now the 4 range is a little bit more temperamental, I say, because it is a quicker moving chart, and you really have to know how to trade what I call micro levels. Okay, well, let's take a look at an example of just drawing a demand zone strictly and straight off the 12 range chart, using just one chart and trading from it once price pulls back to an area. Okay, so here we see as price was moving to the downside, it made a low here, pulls back, makes a lower low here. So what did it do here? It took out support right here. It took out structure on the way to the downside. Now what is it doing? It turns back around, okay, and starts making higher highs and higher lows back up to the upside. And eventually doing what? Taking out structure right here. It took out resistance, okay? So it made structure to the downside, turns around, makes this low, and breaks structure right here back up to the upside, takes out this high. All right? So once it takes out a major area structure, as it did right here, I'm going to show you. So this was originally a move to the downside. Low, lower high, lower low. But we have a high sitting here. Then price turns around. And what does it do? It turns back up to the upside and takes out structure right here. Okay? Takes out structure right here. All right. So once price takes out structure, as it was making these higher highs and higher lows to the upside, and once it takes out structure, I mentioned this before, you have to, it's a step-by-step process. Once it takes out structure and it's leaving behind all these little swings here, these lower lows and these higher highs and higher lows to the upside, if you start paying attention to the moves to the upside here, this move to the upside, nice buying came out of it. Why nice buying? Lots of green candles. Green, 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 green. Pulls back. Green, 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 green. Making these higher highs and higher lows to the upside. Pulls back. Green, 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 green. Takes out structure. Breaks structure. Okay? So, all these areas could be classified as areas of demand for price to pull back to. Okay? And here's an example right here, just taking a trade right off of the 12 range chart. Price break structure right here. Major area of resistance as it's pushing higher. Pulls back, okay? It taps into this demand zone here, okay? It even taps into a demand zone sitting right here. This is an area where price could, pull back to and possibly reject, even right here, okay? But I want to show you an example of the trade I took yesterday. And again, you want to look for areas of zones that are untested, meaning where price hasn't tested those zones yet, okay? Price hadn't tested the zone yet, and that's why it stuck out to me. It stuck out to me, you know, because look at it. Price pushed up, pull back, push higher, pull back, didn't test that demand zone, and just kept pushing higher. Eventually, it comes back down to this area right here, this demand zone, and all I'm looking for is a break in a candle now. Okay, it taps into the demand zone. This demand zone is untested. Why is it a demand zone? Because it's an area of aggressive buying. Pull us back to the area right here. All right, the moment this candle here, a green candle, breaks this red candle to the upside, which would be on this candle right here to this candle here, you go long. Okay, yes, if you go long, it does pull back, but you place your stop below the lowest point at which price pulled back into the demand zone, which is right here, a few ticks below this low right here. Okay, so stay in the trade. Price never comes down here to take out this area of support right here. It may try to scare you out right here, but stick with. You have to be, stay with the trade and don't be scared out of the trade. Some of us will sometimes, and we'll get out. But as long as price doesn't break this area right here, you're good. What does it do? Turns back around. Stay in the trade, and it pretty much goes back up to almost the tops here. All right, and that's how you trade it. You're just looking for areas where price is breaking structure as it did to the upside, took out resistance here. And as it's moving to the upside, making higher highs and higher lows, you look for key levels where it's making higher highs and higher lows, where a lot of buying came out of those levels to the upside as it was making moves to the upside. And those areas are going to be very impactful and high probabilities levels where demand is going to lie at. All right. And that's pretty much, guys, all, I don't really know how to break it down any further. I mean, I'm kind of getting elementary with it, and I really don't know how to break it down, so you can actually see it or understand it even clearly, or more clear than that. But this video was to help those, and hopefully it does help someone out there that has questions about, what I look for each day as I go about my trading session and looking at the Emini S&P 500 or the ES futures. Okay, how do I identify the key areas of supply and demand? Okay, well, the biggest thing is before you even start doing any of that, you have to understand market structure. If you do not know how to read market structure, stop, because you're going to fail. I promise you. All right. Now, I'm not trying to wish anything on anybody, but I promise you that if you don't understand market structure and cannot read the market, you are not going to succeed. So stop dead one right now. Stop right now and go back and learn market structure wherever you learn it from. Okay, I do have a video too on my channel to where I talk about market structure, and you may want to watch that. But do your research. I've done my research. No one taught me how to do this. I had to teach myself in a sense, and that's why I'm trying to make these videos to kind of curve the edge or help people kind of be more on a fast-paced track than I was, when I started. So I'm spoon-feeding you the information. You just have to heed to it and understand. And you have to understand the two things I keep talking about in most of my videos: market structure, market structure, market structure. 1, price action, price action, price action. 2, you got to understand those things if you want to succeed. Okay? So that's all I have for you guys today. Hopefully this video helps some individuals that have questions about, certain things pertaining to the way I actually trade. You don't have to be following the strategy how I use. Trade the strategy that works for you. I just want to share how I trade with you guys, and that's the reason why I make these videos. So thank you for watching. And like I said, hopefully it helps someone out there out. And I'll see you guys in the next video. If you don't mind, please drop a like on the video. As well as if you're a first-time viewer of the channel, please subscribe to the channel. We'd love to have you on the team. We're trying to continue to grow the channel. As well as we have a great Discord community. If you're interested in that, you can find the Discord link down in the description portion of the video below. And invite yourself in free of charge. It's free. It's a great community where we as traders, I think we have almost 300 fellow members on the channel now, to where we each morning, talk about the sessions, talk about the markets, talk about if you're a futures trader, we're talking about the future markets. So we basically share our thoughts and ideas, tips and hints about possibly what the market's going to do. Some people discuss their strategies, or whatever the case is. No problem with that. I just ask that you don't come on and try to persuade other people to go outside of this community here and to go to someone else's channel. Okay, that's a no-no. all right, and you will quickly be banned for doing so. But outside of that, the community is user friendly. It's we as fellow like-minded traders come together. Like I said, we share our thoughts. If you have a question, we use it also as a question and answer in type form. If you got a question, don't be afraid to ask. Someone will have the answer. It may not always be me, but someone will have the answer. So invite yourself in. Find the link down to the Discord, to the Discord down in the description portion of the video. And that's all I have, guys. Thank you for watching.